Good evening, everybody. All right. Let's see, we're kind of in the summer doldrums. Just not very exciting. The Dow pulled back all the way back to the T-line today. But we could also see that the NASDAQ, after a big left-right combo, sold off. So we got to now see whether the 50 is going to act as support. And see other things like crude oil slowly drifting back up, and this big fear of soybeans selling off moved up pretty good over the last 2-3 weeks. So I kind of laugh at all this talk about the farmers getting beat up pretty bad. That's the whole reason for the futures market, was that before they even plant their crops, they can sell their crops already at a price, so their risk factor is gone. But anyways, that's a long story. So anyways, the nice thing is that we can still find some good charts based upon patterns. Here's kind of a fry pan bottom breakout on LSCC and CLFD. Let's make this a little bit bigger. You can see there's kind of a wedge formation breakout, then popped again today. I would stay long on this one, make this a little bit smaller, with the anticipation that you should be coming back up at least to this level. And ESND was the result of a kicker signal. See where it opened here, closed here, gapped up and went the opposite direction, and traded out through that level. Kind of the same scenario when we were recommending HCPL on its kicker signal gap up, keeping a good strong uptrend. Still hasn't been able to even close back below the 3T line. So the advantage we should have if you're running a portfolio is that we can see which patterns are still working. MNK still working. BVN also still on a nice uptrend. MRTX, wave 1, wave 2, in wave 3 right now. So showing these not because we're any great stock pickers. It's just the patterns that you can recognize where the investor sentiment is building up. Once it hits your buy signal and your breakout, and you can identify what pattern you may be in, like a J-hook pattern, it remains very simple to just stay long as you're above the T line. There'll be others where you kind of observe the obvious. This wasn't it. VLRS still moving nicely. Where was the one? Oh, VIC. This is when they gapped up, and then they had a bearish engulfing. That was probably one that's telling you it's time to take some profits, just based upon the fact that you're up in the overbought area and you're starting to see selling. And things like INNT, let's make this bigger. I know we have had a lot of conversations in the chat room before, people saying, oh, that's a one white soldier. I don't know what one white soldier is. This is not a reversal signal, which is more of an implication that you'll see a bounce, not a full-scale reversal. And VSI, also still moving in the right direction on a very simple prospect that it's staying above the T line. Did we just do that one or not? On the other hand, when you start seeing the markets getting a little bit toppy, not so much the Dow, but we started seeing a few days ago that we started showing some toppiness up here, meaning sell signals. This is what you call your meeting line. Notice how they opened here and closed here. Then they gapped it up and closed it back right where they opened it. That's a sell signal. They took it up one more day, but here's where you should be very cognizant that if they gap down and do a bearish harami at the low end of the previous candle, that tells you the bears are starting to take control. You start watching for selling. So with the selling, that allows you to start liquidating long positions and start adding short positions, especially when they start rolling over or they start breaking a trend. That's CRK, IMMU. Start seeing selling. There's your left-right combo, and there's your close back below the T-line, starting to give you that downward pressure. And we'll get to some others that kind of show you the reality that when you close below the T-line, you're going to have much higher probabilities to be heading lower. This is where the type I say, observe the obvious. The obvious is that this is in a downtrend. Oops, make it smaller yet. And the 50 is relevant. So you start seeing sell signals right at a relevant resistance level. This gives you that much more probabilities that that's where everybody's decided to sell. ZAG, the bigger the signal, the more compelling. There's now been a change of investor sentiment. Same thing, kind of a little sideways wedge, and they broke it to the downside. Again, doing a doji sandwich right here, telling you that you can pick out a very relevant, safe stop point, such as just below the doji, that if they come back down through the low of the doji on a doji sandwich potential, you've got a pretty good idea which way they're taking it based upon the doji sandwich. DVAX. Don't want that. But you kind of had this trend reach right here, and notice the little pieces of evidence. We had a shooting star that just touched the 50 and sold off. Then we had a sell below the T-line and a close below this level. Told you the bears probably have taken control. And RGNX, another one that we've been short. You can see the sell signal. You can see another sell signal. Then the gap down. That's kind of telling you the bears have obviously taken control here. Now, where could this go to? If you're not sure whether it could come back here, I don't know what that line is. But put anything else on here that you know everybody else is watching, like Fibonacci retracement numbers. Bah, humbug. So now you've got more targets to look for to see if they support here, support here, support here, or all the way down here. It's not that we're anticipating that it's going to hit one of these levels. It's just we can observe and see if it does hit one of these levels and does a reversal signal, that was likely where they were taking things to. So the biggies, Roku, bearish harami, bearish confirmation below the T-line. Where's the next target? Probably here at the 50-day moving average. Netflix. Ever since we did kind of a doji gap down, and then their earnings that didn't come back up and do a belt hold, you can see what direction you are in, direction or who's winning, the Bulls or the Bears. And as long as they can't close this above the T-line, you know the Bears are winning. This was a bad sign the other day when they gapped up on good earnings and closed back down in the trading range. More than likely, this could be either coming back to the 34 or the 50. So obviously, there isn't any great strength in the big traders. Here's a Evening Star signal in Apple. I guess they announce their earnings tomorrow night. Anyways, we're below the T-line. Anytime you start closing below the T-line, the probabilities are going against you on the bullish side, going with you on the bearish side. Tesla, the bigger the signal, and the fact that they really haven't been able to get this back up above the T-line, you stay short. Nugget is still telling us that gold prices are drifting lower. Labu, not showing much of anything. Took you right down to the obvious support level, which was the 200-day moving average. And Nvidia got hit pretty hard today. Didn't really have anything in here that was any interest, but now at least it's showing which way the pressure's moving. So this is why knowing what the candlestick signals or each formation is telling you. Look at our big bearish engulfing signal in mauve. What did that tell us about this uptrend? It disappeared. You want to be out of this. Now, I know there's people out there just like me in the past saying, well, maybe it will turn around and head back up. Boy, I don't want to sell it because if it did, how stupid I'd look. Versus now when I look at a chart like this, I say, all right, is this heading up, down, or sideways? Right now, it doesn't look very good. So why am I sitting in a chart that doesn't look very good? Close it out because there's another chart somewhere that looks more like this that you could move your money to. All right. So here's why you want to know what to expect after a reversal signal. A bearish harami in the overbought area. If it opens lower, what's it telling you? The bears are taking control. A hanging man in the overbought area. If it opens lower, what do you want to be doing? Closing out your position. Especially if it's all doing it right about the same level that it topped out before. This is why understanding what this signal illustrates and knowing what to do if that signal is starting to confirm. JTLS, the big breakout, then the selling. This is why I make it a rule that if this opened positive and started trading positive, you want to stay in it. So you put your safety stop at the previous close because they had a big, huge up day. And logic says if they can take it up but bring it back down through the close, there's probably a 90% probability they're going to be taking it down. The other aspect we have is we can start watching to see when the profit taking's over. Hammer, inverted hammer, doji, bullish confirmation, and support on the T-line. What's this telling us? That more than likely we've got our classic fry pan bottom J-hook pattern. PGNX, kind of a scoop pattern. Kind of an island, or not an island reversal, but a kind of a column reversal. Now, a column reversal, like we're seeing in HZN, oh man. Come on, come on, come on. Well, 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 well. HZN had a column reversal. All right. And then these are the breakouts. You can see kind of a trend wedge. You can see where the resistance level is. You can see how they got there with a best friend. Closed right on the 200. What's this tell us to do tomorrow? If it opens positive, telling us the 200 is not acting as resistance after a big breakout, that means there's going to be more upside. AGN, another breakout. See how it broke out through this level, telling us we're in our next wave to the upside. And DRYS. Why do I have this one on here in the breakout column? That doesn't seem. Oh, maybe we're thinking of breaking out through this level. All right. So if we can see an obvious resistance level, notice we had a Morningstar signal. Now we're trading up above the T line. Shows us we could be buying this one on positive trading because of the buy signals. Stochastics coming up out of the oversold area. But we have to just watch to see what happens at that level. If it breaks through that level, now we know we've got the new, the next wave in progress. Okay, we'll try to sneak up on this one. Oh, man. Well. All right. It got me. All right, so here's kind of your bullish flutter kicker signal, starting the uptrend on this one, TECS, the Bears, Bear Fund. That one can still be bought on positive trading. Now, ESV, that's your trend kicker signal. Notice how they opened it here and closed it here. It was already in a trend. The next day they opened it above the previous day's open and took it higher. I don't know. Did I do that backwards? No, that's Heinz. And Heinz is better than bought out, right? Let me do this. That's no good. Yeah, that's, no. There you go. That's your column reversal. Kind of a cradle pattern, but the big move here, big move here. That's a column reversal. They're very, very high probability. I don't know why it won't come up over here. And Noble, we little kicker type signal. Kind of consolidated in here in the oversold area and then did a kicker type signal. This one can be bought on positive trading because you've got a kicker type signal. Notice your kicker type signal right here. Opened here, closed here, gapped up and went the opposite direction. That gives us the prospect of this being the support level, this being the resistance level. That's why we want to kind of be able to identify the signals and patterns. Here's a nice little fry pan bottom breakout on HABT. Expect a 45-degree off of here. Depot. Kind of your J-hook pattern or fry pan bottom, breaking out to the upside. A good indication on positive trading that you're in wave 3. So those are the ones that are kind of identifiable patterns. Oops, I actually got some more. EC. Kind of your bobble breakout. Got kind of a wedge. Little wedge. That's not what I do. Yeah, that ought to make this look real great. So wedge right here at your T-line crunch breakout. Just a high probability entry point. CVI came up, failed, right back to the T-line. You can still be buying this one on positive trading. That would be your bobble breakout. And the message. There's your message. Open up, comes all the way back down. Then you watch for when the profit taking is over. And that's when you start buying. Why do we call this the message? Because even though it was ugly on this day, the message was this way up. Now, there's a difference between a message and a kind of a belt hold. Notice where this closed. This still closed above any of the trading range. Where something like Amazon, when it gapped up way up above the trading range, it came right back into the trading range. That told you the bears weren't letting the bulls take over. So those little tidbits kind of keep you or get you ready for what to do next. There's your message. There's your bullish Harami. What's a bullish Harami tell us? The selling has stopped. That's when you can start buying. Now you have a wave 1, wave 2, wave 3 in progress. This sector, the auto parts sector, had a big, there's a big hammer, doji type day, inverted hammer, bullish confirmation. That's on Dana Corp. Axle, another big hammer, bullish confirmation, same industry. And then Goodyear had a big bullish engulfing signal. Telling you there's been a dramatic change of investor sentiment. Using the simple rule that the bigger the signal, the higher the probability there's been a good change of investor sentiment. MCRN, there's your belt hold. This is what you start looking for. It didn't start the next day, but when it started trading back up above the T-line, it was confirming here. Kind of the same scenario over here on 3M. Belt hold, bullish confirmation. Which one was it that didn't work? Can't remember. Can you give us a few good defensive stocks? JP, I doubt it. That's usually what, that's not how I usually find things. There's your inverted hammer gap up on Ocean International. Still in a good uptrend, especially with that inverted hammer. And Merck, there's your belt hold, bullish confirmation, doji. So what do we look for tomorrow? If it opens positive, more than likely it's going to move positive. What happens when they take out or do a big belt hold signal? They take out a lot of sellers, giving us the better prospect that if this is the current trend, that once they've taken out sellers, that might be your trajectory of your next trend. And Verizon, setting up for a J-hook pattern. Not a very exciting stock, but moving in the right direction. On the short side, this is why when you start seeing the market get toppy, it's always good to start looking for a few short positions. Oh, for crying out loud, what's going on? There we go. This is how you identify that your uptrend is over. Look at your gap up shooting star. Oh, on Merck, hold on, I'll get back to Merck. Where is this shooting star occurring? Up here in the overbought area. Where is this shooting star occurring? The stochastics are down here at the lower end of the range. So is this at the top of a trend, or is this just starting the next trend? Well, your stochastics are saying you're here, not someplace like here. On Merck, did I do Merck? On this Merck? Yeah, not overbought, huh? Okay, a belt hold. These are things you should be getting out of the training programs. A belt hold is, look at where your trend is, or your trading range is. Then they gap it way out of the trend and bring it back up into the trend. The Japanese price traders explain it as two sumo wrestlers fighting. One's trying to back out of the ring, the other one grabs his belt and pulls him back in. Here's the trading range. Gap it way down. So what happens when they pull them back into the ring? What's happening right here? All the sellers, and there's buyers, sellers, buyers, sellers, buyers, sellers, big sellers. And then what's happening to those sellers? The bulls are sopping up all that selling pressure. Now there's not as many sellers in the way. Okay, we did Weight Watchers. Get ready to short this one on weakness tomorrow, because you can see how it failed here at the T-line, and failed the 50, and failed right here at this level. Any weakness tells you this area is not going to act as support. PTLA, when they gap it down, that's telling you there's lots of pressure occurring, selling pressure. All right, this one was going gangbusters here for the last few days. Do you have a favorite signal or pattern, one that makes you more comfortable with probabilities? I guess the first two that I can think of is the kicker signal and then the best friend. But I usually tell people, if you can't learn all of the signals, or you don't want to learn all the signals and patterns, there's about 15 that are very effective. Learn 4 of them. And the 4 I would suggest would be the best friend, the doji gap up or doji gap down. Kind of combine that with a left-right combo. That's a doji followed by a bullish or bearish engulfing signal. The fry pan bottom breakout, the kicker signal, and probably the J-hook pattern. If you just learn those 4, and I say learn those 4, learn them to the point where you know exactly what should happen, where they should be moving, where they should be not moving, when to get in and when to get out. You master just 4 signals. Those 4 signals are still going to give you more trades than you'll ever be able to handle. So look at what investor sentiment tells us to do here. This stock started at 2.5. Bullish, bullish, bullish. Look how far we were starting to move away from the T-line. Then they gapped it up here and started taking it positive. When they gapped it up this big, what should have been your first alert? The fact that they gapped it up. Now, if you happen to have been long, and then today they gapped it up and started doing this, as soon as they opened it here, I would have been taking profits to see what happens here. Now, if you bought back here, you closed it out right here, but you got the majority of the profits off of that trade. So that trade, I guess on today, am I reading this right? Hit a high of 20 and Yeah, hit a low of 6. So even if you didn't flip to your 10-minute chart, when it opened here and started trading positive, the fact that they closed it here and they opened it here was an immediate alert to say, if they're traded up, put your stop right here. They shouldn't come back down. If something great is happening, it should be going higher. That's where you should have had your stop. If you miss that stop, you definitely should have had your stop back at the previous day's close. Because logic says if they traded way up here and they come back down through the previous day's close, the sellers really have the control. Should have put a stop at the open price. That's what you taught us. Yes. But I would have probably been, if I had bought this down in this area and it just went from 320 to opening up at 16, whatever it did, 16.97, and started trading positive, unless something real spectacular is happening, yes, I'd put my safety stop here. But then as it got up in this area, probably didn't have too much time, but you would have been stopped out right below where it opened. And remember, we can't always get out at the exact high. We can't always get in at the exact bottom. We're trying to find the high probability fat part in the middle. That was that one. Whoops, we're on the 10-minute chart. We don't want to be there. Okay, this is where you observe the obvious. This is kind of showing you that if you see a sell signal and it's been holding the T-line all the way up, why would you even bought it on the huge gap up? You should be looking at a sell right there. Yeah, we weren't buying it on the way up. We were putting a sell stop at the open. What one was it? AWX. Yeah, you wouldn't have been buying here. If you had bought down here and you were holding, and then you saw it gap up here and start trading positive, you would have put your sell stop here, because if it came back down through there, that's where you should have been taking profits. David, that's another reason why I've never tried to buy. That's right, Sumo, the original wedgie. I never try to buy after hours because you can't ever tell what they're going to do because of your volume. If a stock trades 800,000 shares during the day, it might be 800 shares that's trading up 20 points after hours, which isn't the market. It's just somebody trying to buy, and it's using the exuberance. What did I just do? Did I do PI? PI. Kind of think of it this way. If you see a sell signal after it's been above the T-line, give it another day. In this case, they took it back up the next day and then brought it back down here. That's where you would have closed out. Then you could have been buying back here because you could see the J-hook setting up. When it got up here, you had a bearish engulfing signal. What do? You give it another day because this has been a relevant support level. So brought it back up. All right, pretty good. But the next day, they closed it back down below the T-line. So what do you have essentially going on up here with stochastics in the oversold area or overbought area? Bearish engulfing, bearish Hiromi closing below the T-line. Who's winning the war? You've got two sell signals. You want to get out. Would you get in here or trade should have been done today? This was more of a short, but if you started shorting right in here, now your target was either the 50 or the 200. would not get in here. This is just more of an illustration that once they break the T-line, the probabilities are pretty strong that they're going to be going in a southerly direction. Notice the information we're being given right here. Doji, doji, doji. Can't get up above the 50. Now you have a bearish doji sandwich. That's when you can be buying on weakness today. You always get big moves like this? Definitely not. But if you can analyze what this is telling you, that they're not going through the 50 and they're back below the T-line, that's what you're looking for, is that situation where they're starting to really sell it off. Who is writing this stuff? Terrible handwriting. Big shooting star, bearish Harami. Bearish Harami closed below the T-line. Tried to take it back up, closed below the T-line. Seeing more than one sell signal in the overbought area is telling you that's where the bulls are starting to take control. Get ready to start going short. So here's Dova. Observe the obvious. Wave 1, big, huge evening star signal, closed below the T-line. Bullish confirmation, starting to cover the short position. Failure right here at the T-line. You could be shorting today and or shorting tomorrow with the anticipation wave 1, wave 2, wave 3 could take you down quite a bit more. Oh, pshaw. Yeah, please. No, that's not it. That's a nice right hand bottom. So we'll go on. Bison. Bearish engulfing. Bearish engulfing. Closed below the 50. There's a gap down here that it could head to. Yard. YRD. What's going on here? Well. There we go. Yeesh. Evening star signal. You're in a downtrend. They tried to take it up, did an evening star signal. Implies there's still more downside. Is that what I was looking for? Let's see. And ENX. That might be it. I guess another one to illustrate that when they close below the T-line, the probabilities are taking you down. I'm not sure if that's the right one, but maybe it is. FIVN. The bigger the signals. Bearish engulfing. Bearish left-right combo. Wave 1 into wave 3. Likely target testing the lows. NEWR. Big bearish engulfing signal. Remember, anytime they gap it up in the overbought condition, start watching for a sell signal. Where was your best place if you were long to have your stop when you saw it gap up in the overbought area and immediately started selling off? Put your stop at the previous day's close. If it comes down through there, more than likely you've got some sort of sell signal setting up. Weibo. Wave 1, dumpling top, breaking this resistance level. You want to start shorting this one on weakness tomorrow. And one more, just run. Doji, bearish engulfing, left-right combo. Tried to bring it back up, failed. Tried to bring it back up, failed. Now you can watch to see if they break the 50, more downside. There's still a little gap down here. Somebody was asking the other day, don't gaps get filled? Yep. Sometimes it takes 3 months, sometimes it takes 3 years, but if there's a gap, it usually becomes a target. Okay, so with the market kind of rolling over, we don't know whether it's going to do a J-hook pattern and head back up. The NASDAQ obviously is a lot weaker, and the S&P 500, kind of your left-right combo closed below the T-line. There's a gap right in here, meaning they could logically bring it back to the 50. If that's the case, telling us we've got 3, 4, or 5 days maybe to the downside, as the market started getting toppy up here, you start naturally rolling out of long positions that are showing weakness, and knowing that you're in an overbought condition in the market, it now becomes prudent to go ahead and start looking for short positions. The Russell, I think the Russell has been acting weak for, yeah, there's a bearish engulfing. So your Russell, at best, might be doing in a wedge formation. But right now, are you raising cash? No, I've been going short. Remember, we've had quite a few positions that we could move to go short. So once you get up here in the overbought area in the markets, there's going to be some good short positions. So I don't know whether you would call it raising cash, but your exposure is now less bullish. Let's say over the last few days, we've gone from maybe 8 positions long, 2 positions short, to now that we might be, at this point, 5 positions long and 5 positions short. So we're making money on the short side, and we're still making money on the positions on the long side that haven't shown any weakness yet. Got things like MNK that are still moving in the right direction, and VSI still moving in the right direction. So how long do we hold on to these? As long as we don't see a sell signal and a close below the T-line. Playing the downside will raise some cash. You can if you don't want to go short. You switch from longs to shorts directly instead of holding on cash. Pretty much, I go on the basis that the candlestick scanning techniques will always provide more trades than you'll ever be able to handle. That usually means I am 100% invested, probably 90% of the time. That doesn't necessarily mean I'm in 10 long positions or 10 short positions. That means as the market's going up and I'm buying, I might eventually get to 8 or 9 long positions. And as the market gets into the overbought area and starts showing some weakness, I'm closing out maybe 1 or 2 long positions, and then I'm looking for moving those over to short positions. So I'm always going to have a supply of good longs and good shorts. So yeah, most of the time, I say most of the time, 90% of the time I'm fully invested. Or as, who was it? Not Casey. Yogi Berra said about golf that 90% of the game was half mental. Yes, VSI is at a potential resistance level, or it's at a potential breakout level. So where's the obvious place that you don't want to see this trade from here? Got a safety stop just below today's open. As logic says, if it comes down through there, what did it tell us about this top up here? That was the top. What is your average gain for trading stocks per year? I'll just say ready. It all depends on what the market gives us. If I could trade full time, I mean, just sit here and concentrate on my trades, I would guess that I could make 10% monthly. That's and that's not including option trades. That's just stock trades on a margin basis. Now, if you compound 10% monthly, I think that comes out to something like 320% gain for the year if you compound it. Yeah, that's kind of a fry pan bottom that broke out right here. So remember, just the visual element of our aspect is we can see investor sentiment is building up and breaks out through the resistance level. Okay, I guess with that, is there any general questions on candlesticks? Oops. While you're typing in, hold on for 1 minute. Okay, sorry about that. I know you'll all be drastically interested. The turkeys, they used to be 7 or 8 inches high, are now about 12 to 14 inches high. There's about 10 of them with their 4 parents, and they're getting bigger. It'll be a good thing. Okay. When you start looking for a buy signal on Labu, well, you're getting toward the oversold area. The last time it came down here, it did a hammer signal. So you watch to see what type of reversal signal might occur here. Do all candlestick signals require confirmation except kicker and best friend? Yeah, the still uncut because, for example, the probabilities on a kicker signal is that it's going to go higher. That's the probabilities, high probabilities. Jay, they make noise. They were sitting out here this morning. Let's see. Except the kicker. So the probabilities are that the kicker signal is going to move in the right direction. That wasn't what I wanted to do. Same scenario. This was a cradle pattern, but it failed right here. Now it's starting to come back up. That was on FedEx. So SP, yes, you want to see bullish confirmation. On AMD, you stay long until you see a sell signal confirmed. More in here. So what's happening? Oh, there it is. So you can see kind of the kicker signal, breakout, wave 1, wave 2. I would stay long, as long as you stay above the T line, let alone the 3T line. So just as a safety factor, I'd probably have a sell stop below yesterday's open or close right here at the low of that doji. Because if it comes back down through there, more than likely they're coming back to test the T-line. You look for signals that are more likely to move in the direction of the market. Yes. If I think I'm in a situation like this, obviously I'm looking for a lot more long positions than short positions. If I see a situation like this, I'm starting to look more for short positions if they trade it weaker. I'm still looking to see whether they do a J-hook pattern and go to the top of this trend channel, which would be a J-hook pattern, or if they're failing, and what told us they were failing over here, sell signals and a close below the T-line. If candlesticks get too far away from the T-line, I was told today to use the 3T line. So if the stock is above the 3T line, I should expect it to come back. If the stock is above the 3T line, yes, the further away you move from the T line, start using the 3T line. If it starts coming back down to the 3T line, that means it's probably coming back to the T line. So the 3T line is just more of a quick directional. Now, obvious, the simple analysis is if you're in the overbought area and you're starting to see sell signals, remember the sell signals are your first factor to analyze. The T line and the 3T line become your confirming indicators. Do the signals generally work as well coming out of consolidation period as they do coming out of a trend? Yes, because it basically tells you, I had one today. Which one was it? Kind of doing that's a J-hook pattern. There was one that was trading in a flat range. And it was doing kind of a fry pan bottom. Yeah, that's more of a bobble breakout. But remember, the signal coming out of any trading range is indicative of what's happening to investor sentiment. It may have failed here, yes. Twice it hit the 50. So if you were buying down here, where do you think your first target was? These moving averages. You can see where they failed right at the moving average and did a shooting star. So if it opened lower tomorrow, what should you be doing? Probably taking profits. If you didn't take profits today, what's the next thing you should be looking for to see if it's going to support at the T line and do a bobble breakout? Okay. Just with that, Jim, go ahead and do the double line. And in 4.2 seconds, do the next double line. Halliburton started coming back up. It's not a real clean chart, but if you're buying it, you can buy it now kind of based on a scoop type pattern. It wouldn't be your best scoop pattern, but if it opens positive, you can be buying it. Now, it's probably a function of what crude oil is doing. Crude oil, as you can see, is back up to the $70 area. KEX, that's a toughie. That's a real toughie. Did kind of this is what you call a tweezer bottom. You can buy this, but I would be more apt to buy it above the high of today, which would be above the T line. Then your next likely target is going to be the 50-day moving average. This one, JB, I still wouldn't be long or short this one. That's not a good looking chart. Zoes, there's your bearish engulfing signal. And where did it occur? Right here at the 50-day moving average. Confirmed. So I'd be going short on this on weakness tomorrow. then you just don't let it close back up above the 50/T line area. Big lots, nothing. You can see what the trend is. Just nothing. I'd be someplace else. And Teva, you can be buying this one on strength. You can see how it used the 50 as support, kind of a bullish engulfing signal over here. If you're buying it on strength, again, it's using the 50 as support. I wouldn't want to see it close back below the T line. Meat, not anything. You can't be short this one because it's below $5. I wouldn't be long or short this one at all. I'd be someplace else. And MDXG. Kind of a bobble type pattern using the 34. It hasn't been able to close below the T line. So if you're long, you stay long, but it needs to stay above the T line. Gold, surprisingly strong. There's your inverted hammer. Remember our inverted hammer rule? If it opens positive after an inverted hammer, you probably got a 95% probability or greater that it's going to move up. So I'd stay long on this one. Caterpillar had record earnings, but apparently not good enough. There's your bearish engulfing signal, failure at the 50. Oh boy. You should be, if I don't know whether I'd short it. If it opened lower, I'd be out of any long position. I don't think I'd be short, though, at these levels because of the congestion area. Another one that looked like it hit the top of the trend channel, now selling off. Did a doji type day, which means it has to open positive and trade positive to stay in it. If it trades lower, it means it's coming back down to test the T line, and you're back into the trading range. You definitely would have to watch to see what it does from that level. AMZAJ, that might, oops, no, it's doing something. It's not coming up, though. AMLP. Not a great looking chart, but it's heading in the right direction. Just stay long. Notice your left-right combo gap up. There was your message. Stay long as it stays above the T line. AT&T, not a very exciting stock. You're heading in the right direction. There's your Morningstar signal followed by a gap up, which broke this level. Now you just make sure it gets through the 50-day moving average. Even then, it's not going to give you a big, huge percentage return. SID, you stay long. Notice your trend kicker. I would stay long with the anticipation you're still heading for the 200-day moving average. Chipotle, what's happening here tonight? Man, now things are not working well. I would have closed it out with it closing back below the low of yesterday. I told you they failed. The short, oh boy. Yeah, that would be, it's not your greatest chart to short because you don't know what it's going to do in here. If it traded lower, I would suspect it's coming back to the T line, but that's probably not a big enough percentage to want to go short on this stock. There's too many other good shorts to be shorting. Disney, you just stay long as it stays above the T line. ESND is a kicker signal, still confirming. You stay long until you see a sell signal. Venga, stay short. Yeah, now you can't be short this one. Definitely should not be in it. Bulls, Kohl's right now is having you can't tell which way it's going. I'd take my money someplace else. And Macy's, you stay long. When it broke this downtrending channel, just stay long. Notice it kind of did a little Morningstar type signal staying above the T line. Chipotle down again on food issues. All right. Yep. Inverted hammer in the oversold area right here at the 200. T2. I don't know what the volume is, but I wouldn't be afraid to start buying on positive trading tomorrow. Just make sure it gets through the T line. Down to 450, so it's back right here in this range. Yeah, that'd be something to figure out. Poisoning again. Columbus. All right. I remember right along the main road down below my mother's house, there used to be a Chili's there. Chili's restaurant. And they apparently had some bad peppers brought in that made people sick. And the lawsuits were so great, they eventually had to shut down the restaurant. And I think since then they've bulldozed it to make it locked. Okay. Right now we're in kind of that indecisive area, which there's still some good short positions to go after. So I'd keep, would you review the current state of recommendations you made today? We did that right from the get-go, didn't we? Did those first. You want to short YPF on weakness. LSCC. You stay long on this one. I didn't execute today. It opened positive. It needed to open lower. CLFD. You stay long. And what was the other one? ES and D was the kicker signal. Stay long. SOI, I remember that being kind of a scoop pattern. Did a doji today. Makes this very simple. If this opens positive tomorrow, you can be buying it because of the doji sandwich scoop pattern breakout through the 50. That would be a good trade. An AMP, not good. You can see the tails to the upside. Doji, left-right combo, doji. If this started trading lower, I'd close it out. What kind of issues do you help your participants with at the lake training? Now, AK, that's, have you had any that are unteachable? No, everybody usually comes away from the lake at least with a better view of what they should be doing or what they shouldn't be doing. Let's see. How come this one didn't work? Dollar Tree, you just stay long as it stays above the T line. So what I've found is starting to be a little bit more effective is teaching everybody the different signals and patterns, like the cradle pattern, like the scoop pattern, the strong signals. LP, like the kicker, but there's enough of them that the common request or the common question is, with so many good signals or patterns, how do you pick out the ones that are the best? Well, we've already tried to kind of quantify them to show you which ones are the best, but you're not going to remember all 15 and what to do. So that's why we're kind of pushing more to learn 4 of them. And if you learn 4, like the kicker signals, you know exactly what to do as far as how long to stay in, when to get out, that type of thing. So if you become an expert at 4 signals or patterns, you're going to make a ton more money, just in the sense that you'll know when to get out of trades quickly and when to hold on to trades for much bigger profits. Then once you master those 4, now you can start tinkering around with 2 or 3 more to add to your repertoire. But trying to learn them all at the same time or master them all at the same time is not the right approach. Okay, soybeans, you can see what has been happening in the last 2 weeks in soybeans, 3 weeks in soybeans. This is with all the rhetoric about how soybeans are getting crushed because of the tariffs, and then how bad off the farmers are. Well, the whole point of looking at soybeans is that this is the futures market. If you're planning to buy or plant 10,000 acres of soybeans, you probably pretty well want to know what you're going to get for them when you get out the other end. That's what the future markets are for. So this big move to the downside, I'm guessing, isn't hurting the farmers. It may have been hurting some of the speculators afterwards. But if you're a smart farmer, you're already locking in your profits even before you're planting your fields. Let's see, SINA. Would you consider a SINA to be a cradle, or is it too long? No, this is more, I would consider a dumpling top. A cradle, a bearish cradle, obviously should be occurring at the top in the overbought areas. This is just telling us that wave 3 is about ready to start to the downside. GTLS, yes, that's starting a J-hook pattern. The baby fell out, that's right. Oh, on here, no, we've been out of here. Would have been closed out probably right in here because of the bearish engulfing and then continued selling. As you can see, it's not selling off very much anymore. So you get ready to buy if you're in it. If you happen to have stayed in it, you stay in it. If you closed it out, you can always watch to see if it's going to do a J-hook pattern. Yes, and the soybean farmers probably, they probably sold their big volumes before the tariffs. That's right, tofu. Okay. All right, we're probably ready to see some more consolidation, but obviously watch to see what the Dow does right here at the T-line. See if it's doing a J-hook type setup. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.